Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. This is a really special episode for everybody who's asked me recently to go through my process, how I trade, what I do, the process that I go through, and I'm very happy to share that with you. I think it's really nice to know that everything I do for you is free. I only seek to assist you to be more of a financial blessing to yourself and those you love. I don't have any paid groups, reports, indicators. I don't advertise leverage trading links. I really just show you how to think and how to approach your trading and investment. It's always good to know that all investments become trades sooner or later. If you're holding for a year or 5 years or 10 years, it doesn't matter. You will need to trade out at some stage. When you do, you certainly don't want to buy at the top and sell at the bottom. This channel is all about helping you to sell at a really sensible place and price so that you can be a blessing to yourself and others. A lot of scammers have unfortunately entered the channel. When I respond, you'll see a gray highlighted thing like Crypto Trading KS. Also, the scammers are getting really creative and they're trying to imitate this blue line. Just always remember, view, reply from is what you need to look at, and then Crypto Trading KS. Okay, let's get into this episode. I think you will find it really fun. This is part one of a series. There's a lot that I need to sort of digest for you, if you like, to put it into a cohesive framework that is easy to understand. I've been trading for over 20 years and done tens of thousands of trades. This is really one of the first parts of the foundations of crypto investing and trading. I hope you like it. When people are new to trading and investing, all they want to do is buy. You can see something like this pattern. It doesn't matter what the coin is. It could be any coin that you like. The issue is people just say, I want to buy, I want to sell. Or what do? I don't know what to do. Just tell me, give me the answer. The answer is, it's in the process, and I'm going to take you through that. I literally have thousands of trading rules. I have them on in a notepad, and I transform them into these PowerPoint slides that I put out. Sometimes I get the rule number wrong. Sorry about that, because I copy and paste a slide. But the key is to understand what is in the text. Every single rule number is a number that's been created from either loss or substantial loss. And the reason that I share these rules with you is because I want you to be more of a financial blessing to yourself and others. I don't want you to pay as much tuition fee to the market, which are losses, as you would normally. And in crypto is a very volatile market. I think a lot of people don't understand how volatile it is. It is without question the hardest market to trade in the world. So just bear that in mind. So rule 138, all investors become traders. Now what do I mean by that? If you invest, you will trade out of that investment at some stage. It could be a month, a year, 10 years. Whatever that time period is, it's really important that you understand how to trade, or else you'll end up pretty much buying at the top and selling at the bottom. And there's a lot of reasons for that I'll go through in this particular part one. If you're not an expert, and an expert is a person that makes consistent profits, this is rule 14. Until you are an expert, buy at spot. Now you say, Ken, what does that mean? I don't even know what spot is. If you are setting a stop loss, you're buying under leverage. You actually are trading a derivative. You don't own it. It's really important to own whatever you actually acquire until you become an expert. When you're an expert, you can do anything you want because you have the skills and knowledge. I've seen many people get wiped out by using leverage trading. It's really scary. You can lose your whole account in one trade that goes wrong. It's really important to be able to buy and hold. I say crypto is volatile. It is incredibly volatile. Please don't use leverage until you're expert. That means you can profitably trade, and at least you've done it for a couple of years. That's expert level. When people are new to trading and investing, I see a lot of this going on. Now, I just represent it here for a little bit of fun, but I think it's indicative of the view of a lack of skill. Now, what do I mean by that? A lack of skill. The problem is that many indicators tend to get into an argument with each other. And probably the greatest argument you can see here is you can't see the price action. Like, what is going on with this particular thing? We kind of don't know. The thing that you want to do always is invest in your own knowledge. I do what I do for you, and I'm very community driven. People ask me, how do I do this and how do I do that? I put videos together for you. You can ask me any question. I really love to hear the things that will make you better and more profitable. The whole goal is for you to be a blessing for yourself and other people. So please reach out. When you start off, you want to start off with something like this, just a clean chart. And then you want to be able to mark up that chart with lines. There are a couple of different lines in here. These horizontal lines, if they're above the current price is here at the moment. Bitcoin is currently trading at $34,703. Any line above the current price is called resistance. Lines below the current price are called support. You have these blue lines, which are very, very important lines. They're called structural lines. And then you have shorter lines. They're just called normal lines. You can have this price when it was trading below that line, it was called resistance. And this is typically called light resistance. When it traded over, this line became support. These terms are so incredibly important for you to understand and to know. I'll just show you where you can get a really good understanding of them. In episode 93, I showed people how to draw structural resistance and support lines from a clean chart. If you have a look at that, and possibly if you look into some of the comments, you'll see that's been really, really helpful to people. I'm all about sharing. I want you to do well. Just reach out and let me know anything that you need to know. Rule 9 is an incredibly important rule. Experts do not know your needs. Now, what does that mean? When I was really young in my trading career, I would listen to the news, I would buy the magazines, I would consume every available piece of information from the industry experts. But you know what? They didn't know me. They didn't know my needs. They didn't know how much money I had, what my risk profile was, how long I wanted to invest for or trade for. They didn't know anything about me because they didn't know me. And as a result, the problem was I followed advice which basically caused me serious financial loss. And anybody who's been in the markets has been humbled by the markets. A lot of people say to me, Ken, you're such a humble guy. The truth is that I've just been burnt alive by the markets over so many years that I just say, look, I'm just going with the flow. I've been humbled. And you need to get to a position where you can be humble about what you do. A big part of the KS process is that we go through the news and we understand current sentiment. Rule 36, news often misleads. What does this mean? It means that news is primarily for advertisers. Advertisers come in and they need to grab attention. Really flashy headlines, often the ones that cause a lot of fear or a lot of greed, get more views than other ones. So guess what happens to the news? It gets really sensationalistic, which is a problem. because that's your money that you are putting on different things based on news that was never really there for you in the first place. It's also important to know, I've just come in here and just looked at the current news for Bitcoin. The Bitcoin rally is over. You'll get things like this, and then you'll get other things that will say the bear market is over and everything is good and regulation is occurring, so it's becoming more mature, and then regulations causing crackdowns. It's just incredible. We go through it every day. Just to let you know, these headlines shift with the current sentiment of the market, and they also shift with the greater powers of institutions that really want to get in and out of crypto at various prices. Institutional price behavior is something very, very important to understand. And it doesn't happen in just crypto, it happens in the stock market as well. Something interesting that you could consider, when people write this news, do they think of you in a loving way? Do they think of you as, I'm going to protect all those people out there? Or do they think, I really need to create some sort of clickbaity headline or else people won't read this content? It's generally that. That's the problem. And that's actually what started me on this journey. I saw people getting wrecked right, left, and center by clickbait headlines, by very low quality analysis. And I just wanted to make sure that I could look after people as best I can. And that's my motivation behind this channel. The KS process is really all about rules. Rule 148, be 100% responsible. This at the start may not make a lot of sense. Like, how can you be responsible? The issue is, whenever you put a trade, whenever you put a buy or a sell, you need to know that you're doing the right thing. There's a whole methodology behind doing the right thing. It's really easy to get sucked in by trends, news articles, all sorts of things. Always think to yourself, when you pull that trigger and you place either a buy or a sell, think, I'm 100% responsible for this trade. Am I doing the right thing by myself? What I'm trying to do here is to give you all the tools that can help answer that question. For many years, I lectured first and second year statistics. And one of the things I loved, I must admit, I love teaching more than anything that I ever did in my career. I've done a lot of high-level management consulting work over the years, dealing with multi-billion-dollar companies, solving very serious problems that are very hard to solve. Rule 97, invest in your knowledge. Always seek to improve every day. Pick up a new skill wherever you can. Improve yourself, work on your knowledge, work on your relationships, work on your job. Not work on your job, not work at your job, but really try to do the best thing that you can possibly do. Commitment is so important to success. You can see that trading and investing is very psychological by nature. Let's get into more of the mechanics. Rule 52, Bitcoin moves the crypto market. It's incredible to see people's eyes open when they see just how powerful Bitcoin is on the direction of their beloved altcoin. It's quite amazing. I'd like to give you an example here. This is comp, a graph of comp. This is a depth chart. Don't worry too much about this, it's just a bit of fun. Here I go from a 5-second chart to a 1-second chart, but I'm going to overlay the price of Bitcoin on this particular chart. Don't forget, this is a 5-second chart. I'm going to change it to a 1-second chart. Let's play this video. You can see that we've had a sell-off. Now I've overlaid on a 5-second chart. This is the price of Bitcoin. This is the price of comp. Comp was a top gainer. Now I've taken it to 1 second. Look how the price of Bitcoin is impacting the price of comp. It's just astounding. When Bitcoin goes up, comp goes up. This is just incredible. When Bitcoin goes down, its gravity pulls comp down. It's actually useful to understand at this particular stage of the market, comp was the top leader of the day. That's why I picked comp to just share with the community. Let's start to get into the mechanics of the KS process. Rule 171 is incredibly important. We need to zoom out. I know that when you just want to pull the trigger, you just want to say, this is what I want to trade. For example, say it was this one. You just say, where do I buy, where do I sell? I'm just recommending a slightly different way, a process that will make you, well, it will dramatically, significantly help you to become more of a financial blessing to yourself and those you love. To start the process, we need to look at Rule 51. Start with market direction. Now, what does that mean? Do you remember how I showed you the video of comp with Bitcoin? When Bitcoin goes down, its gravity drags every single altcoin down, but disproportionately. That means it drags it down more. You got to be really careful. When Bitcoin goes up, it drags the alts up, but disproportionately more in the positive side. What I did was to create this psychological trading model based on institutional price psychology, which is called the KS model. It breaks the market from what's called the halving. We don't need to worry too much about this. I actually have a Medium article that I will link to you for you in the description that explains all institutional price psychology and a lot of things. I mean, there are a lot of things here that will help you out. Let's just look at the actual model for now. So the concept is, after the halving, we have a bull market, a bear market, and consolidation. We like to think that the rocket price is the rocket. Rocket heads to the moon is the peak. Rocket, boom, 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 up to the moon says, mission accomplished, go back to Earth, rocket, and refuel for the next run. So the rocket comes back, and don't forget, it comes back from a high like 1163 to 152. It comes back to Earth, when it lands, it capitulates, and then the rocket engineers come out and rebuild the rocket, and the next halving, the beautiful cycle starts all over again. So the bull market, rocket, up to the moon. Now, the high there was 19,666. Can you imagine if you bought when the rocket landed at 152.40? That's what we always seek to do in trading. And then you just managed to sell it at 20,000. Wow, that'd be pretty cool. That's not a bad investment strategy. So the rocket hits to the moon, and the moon says, well done, rocket. Mission accomplished, back to Earth you go, and the rocket lands, the engineers rebuild it, and it all starts again. We're in the bull market phase. After we hit the moon, which is around this time, around the 25th of May 2022, there will be a bear market, and the rocket will come back to Earth, it will land at a low, and then the engineers will rebuild it again. This is the cycle. It's really important you understand that. There's a lot of information I put on these psychological states in the channel. You can see different lightning bolts. They're called black swan events. For example, the COVID and US liquidity crisis just tanked the market, but it recovered. This is what happens when we get a black swan. We can't control it. It's not really worth worrying about, because the issue is that they repair themselves over time. Now, how do we know we're in psychological sunshine? Don't forget, this is institutional price psychology. It is not retail price psychology. There's a massive difference between the two. Retail price psychology is basically driven by YouTube stations and the news. Institutional price psychology is driven by quantitative analysis of growth trends, total addressable markets, saturation, all sorts of different things. When we look, this is a graph, an exponential graph. That means it's on a log scale. This is the adoption of the internet by users. This is 1 million users, 10 million users, 100, 1 billion. It's measured in millions. constant. You can see that the crypto market is actually growing faster than the internet ever grew. Right now, the institutions know that relatively speaking, we're at around 1997 in terms of the internet's adoption, but we parallel that to crypto. It's like crypto is Amazon back in 1997. It's pretty cool. And institutions, they have very, very deep pockets, and they run by the numbers always. As a statistician and management consultant, I can't simply walk into a board and say, take my word for it, it's in psychological sunshine. I would be laughed out of the room. I need to have a lot of cross-referencing analysis to prove it. So let's go through what we go through as a community every single day. We always have to consider that the models can break. So we're just trying to understand if the model is working, if it's making sense. Now, stock to flow ratio is a quite well-known model in the crypto space. When it's green, this dark green color, it generally means it's got a long way to go before the blow off top. When the rocket hits the moon, it accelerates beyond all measure. It goes like vertically up. This is really important understanding in crypto. We can say that that color green is like around that color green and could be around that color or that color. We don't quite know, but we know we're below the peak. That's what's important. We look at a whole lot of on-chain analysis as a community every day. The realized cap holder waves. What this is telling you, very simply, you see there's one big red thing here, a wave. Note, there's 1, 2, 3 waves here. 1, 2, 3 waves here. We've only got the first one. We're waiting for the second and the third. That's a supporting piece of evidence for the fact that we haven't hit the top yet. Let's go further. We need to look at euphoria and capitulation. Capitulation means to surrender, to utterly give up. When we have euphoria, which means irrational exuberance, we have these blue lines. You see those up the top there? We haven't had any blue in the current particular bull market phase yet. We're getting down to the yellow, which is more around here or here, potentially here, or more likely to be there. So we're getting confirmation from multiple sources that the sunshine is still out. Rule 85, all trading is based on probability, which means probabilistic. Probabilities, we need them to get to work in our favor, not against us. If you pick up that particular alt that you want to trade and the probabilities are against you, you will guaranteed lose money. It's all about trying to line all the ducks in a row to try and make the probabilities stack up in your favor. That's what we're doing right now. We're seeing if the market direction is strong and if anything is upsetting the apple cart. Let's look a bit further, because if we were presenting this to a board of directors at $1 billion firm, it wouldn't be simply take my word for it. We would have to produce evidence. You notice this red area here. This is the Puel multiple. You notice the green area here. You notice that this particular line is closer to the green than the red. This is current action. Notice when the price or when the multiple comes through here into the red, we tend to have a peak. You see here, tend to have a peak, tend to have a peak. We're a long way away from that risk scenario. Again, we're just adding the probabilities together to make sure they're on our side. Now, if they're not, we totally accept that, because we know everything is light and darkness, yin and yang. We are balanced. Without balance, you will absolutely lose money, no question. Let's look at another indicator, reserve risk. We see the red area here. When reserve risk gets into these red areas, we tend to have peaks. The green areas are safe zones. Are we in the red? No. Are we at a peak? Have we had a peak? No. Again, we're collecting probability after probability after probability. So we now go back to the KS model, which is a real-time model. Remember, the price of Bitcoin before was not this price. We got $34,720 now. What we can say is that the rocket still has 2 more peaks at least to go. It hasn't parabolically taken off to hit the moon yet, and the probabilities are on our side. The things are looking good. We have an overall market direction now, which is positive from the available data. Now we need to see how people think in terms of psychological safety. This is a search term for Bitcoin. You notice these peaks up here? These peaks occur when people are searching for Bitcoin. What do you think the reason is that people would be searching for Bitcoin? Do you think they're really, really happy? Or do you think they're really, really scared? This is a really interesting question. Just take a note, the current value of that Bitcoin search term is 22. When you first start trading and investing, you may not understand much about stable coins. Stable coins like USDC, DAI, USDT, and BUSD are like US dollar equivalents. They tend to get funded when the market is deployed, when capital is deployed into the market. You notice this big spike up here of USDT. This is USDT, Tether USD, balance on all exchanges. You see we've had another spike up here. But what does this mean? What is it all about? A lot of YouTube channels focus on the fear and greed index, and they look at the chart and they say, oh, fear is doing this, fear is doing that. It's really interesting. But what does it actually mean to the market itself? You've probably seen this little gauge as well, fear and greed index. So now it's 27. But again, what does this mean? How do you trade? How do you invest on this information? It's all over the place, isn't it? I love to save you time, and I love doing diagrams like this. I call this psychological safety. What you can see underneath here is the price of Bitcoin. And we know Bitcoin moves the market. Just remember back to that comp video where we saw on a 1-second chart, Bitcoin pushing the price of comp down, which was a top gainer in the market. It was so strong, but it couldn't withstand Bitcoin's gravity. When there is extreme greed in the market, I put these green lines here to show how Bitcoin's price is behaving. You remember how I showed you a spike in Tether balance USDT, one here and one there. We're almost like detectives. The KS process is a detective-based process to understand what is impacting price and what could come next. And we do this every day in our community. When the price goes up, you notice the Tether balance came into the market. It pushed the price up because stable coins are meant to be deployed into buying. Buy. The FOMO went out. All the news stories would be positive because news reflects current market sentiment. And then all of a sudden, at extreme greed, we have this crazy sell-off. And people buying here would say, oh my, I got it wrong, I have to sell. And they would sell down here. And then the institutions, because they're the ones who do this, they push it up and up and up, and people say, oh, I got it wrong, it's off again, it's going to do this again, and they buy at the top, buy at the top, buy at the top. Fear of missing out is a fear. And in our channel, our community members, we don't suffer from FOMO or FUD, fear, uncertainty, and doubt. We don't subscribe to those ideas. We instead control ourselves because we know that's just pure manipulation. So again, returning to here, extreme greed in, sell off. and then it comes up tentatively, and people say, oh, it can't go any lower, it can't go any lower, it's fantastic, it won't go any lower, and they're all in. And what do the institutions do? Say, thank you very much, and they start to sell off. Now the Google search trends start to come up, and then it goes a little bit and sells off. You remember those spikes in Google? That's here. These are these spikes. What is the spike right now? 24. What does that mean? People aren't paying attention. The other thing to realize, when extreme fear enters the market, people do the opposite of buy at the top. They sell at the bottom because of fear, uncertainty, and doubt. Now everything is bad, and of course newspapers and outlets and YouTube channels, they don't want to say everything is good when there's blood in the street, including their own. They want to say, oh, it's terrible, it's crashing, it's all over. And you get this very distorted advice which shakes out people from the market. And then you get all this talk about diamond hands and paper hands and all of that stuff. And it's really all about institutional price psychology playing with emotion. They do it all the time. They have done so for decade after decade after decade. One thing that you can notice here, which is really good to understand, if you manage to buy at this sharp spike down, which is called capitulation, and just sell around the top, not at the top, but just around that top, you would have made nearly 37% return. Now, I know that was not possible for a lot of people because they went all in because of this fear of missing out. So people didn't have money. That's why when you trade, when you invest, it's important to have dry powder, funds that you can deploy. Really important. After being in the markets for decades and decades, I look at this and this negative capitulation, well, this capitulation event here, and I said, that's pretty much the bottom. Now, that didn't mean that it couldn't go $1 underneath it. It meant that that low pretty much hammered in the bottom of this particular retracement. This is a correction. It's not a bear market. And it's interesting, people call bear markets related to moving averages, and some people say from the stock market, a loss of 10% is a bear market. A loss of 10% in Bitcoin is called Tuesday or Wednesday. It's just normal. This is a very, very volatile industry. It's really important that you have a lot of knowledge. Remember how we were looking at the fear gauge of 27? We're in fear now. Yesterday, the day before, we were in extreme fear. Extreme fear, you're always really, really confident in buying in extreme fear. Why is that? Because nobody's looking. That's when the institutions do it. They do all of this for a reason. They burn people out on this descent down. People just basically say, no more, I'm done. And then they accumulate. Let's quickly go back to the KS model. You remember I was talking about these lightning bolts that happen, such as COVID, the US liquidity crisis, and there are a number of things that can happen around here. Going back to October 2013, the US government shut down. That crunched the market. That's that spike down there, that red thing. It lasted less than 7 days. But the interesting thing, we must keep our eye on the main market. If you don't, you'll get blindsided. So let's do that. Rule 193, check stock markets. This is all about trying to detect weakness and also black swan events. If we get any major structural damage in the major indices, we need to keep an eye on it. It's really important. I'm just going to do this quickly, but I want you to keep an understanding, an eye open for this. This line here is Bitcoin's price. We know Bitcoin moves the crypto market. This line up here is a support line. Now, this is the NASDAQ. The NASDAQ is currently trading up. One thing I will introduce to you later, all price moves in waves. It's going up and down, up and down, up and down, up. And what's going to happen? It's going to move down, but in all probability to this trend line. That's the most important thing that you can understand. When price comes down, you can see all the news stories and headlines will be stock market crash imminent, and it's just coming down. Under normal price behavior, this is a thing that can really freak a lot of new investors out. That's why we need to study, because we can gauge market sentiment. It's critical. We can see on the S&P 500, we can see a very good structural line happening here. We know it's over that previous all-time high. When it comes back, and it will, because we know all price moves in waves. We have no problem with that. The Russell 2000, we can see it is obeying support, but it just came up from a huge move. This is a digestion of that rally. Think about this. When you eat a really, really big meal, Christmas Day, really, really big meal, a festive holiday, really, really big, you eat so much, you have to chill, right? You have to let the food digest. Stocks are no different. They're kind of like people. Okay, let's look at the Dow Jones Industrial. Any problem here? Any market crashes? No, there's no market crashes. But people are talking about it all the time. We have to challenge them. It's almost, I guess my background comes in here, having to present to high-level executive meetings and board meetings of billion-dollar companies means that I have to be prepared. I give you the research to justify what position we're in. If we're not in the sunshine, I'm the first to tell you. I don't fluff things up, because why? You can make just as much profit in the darkness as you can in the sunshine, but you better know which part you're in, because if you're on the wrong side, if you think it's sunshine and it's darkness, or vice versa, that's not good. So we have to always triangulate. The triple Q, very important indice. The triple Q is coming up. Of course it will come back. We understand these things. Price moves in waves. What about the dollar? A lot of people say when the dollar goes up, Bitcoin goes down. When the dollar comes down, Bitcoin goes up. Hang on a second. That chart doesn't look that way, not since 2021, at least. We got to be really careful about ideas given to us. Like it's a form of news. It's a very dangerous thing. Always challenge your assumptions. Let price reality reflect what is actually happening. Because guess what? That's all that's actually happening. Look at the 10-year yield. It's maintaining support. No problem. 30-year yield, maintaining support. What's happening with gold? It's under resistance at the moment. What's happening with silver? It's above support. And thank you to Laurie, who recommended, called out today that it would be good to include Riot Blockchain, because this is a particular company that is doing blockchain. And we can see it's starting to recover. It passed over this resistance. It came out of resistance, retested it, and resumed off. And it's actually above this support as well, with fresh air in there. It's looking good. Overall, what do we say? Are the markets crashing? What's your answer? Yes or no? It's a no. The markets aren't crashing. Let's go back to the previous things that we were talking about. When you start, you look at a chart and you say, wow, do I buy, do I sell? Now you know what the market direction is. You know the stock markets are not crashing, they're healthy. You know that Bitcoin is looking good. So you add all your fantastic indicators to it, and you then get incredibly confused, because this is kind of what happens when you start off. When you get more and more experienced, you'll drop just about everything off and just put a couple of lines on your screen. And you won't even use custom indicators. You can use them if you want. I mean, if they help you, of course you should use whatever serves you. That's always a rule. Rule 47 is incredibly important. Master your edge. Everybody has an edge. You may trade a specific pattern. You may think about volume. You may think about relative strength. Whatever it is that you do, if it makes you profitable consistently, that's your edge. And nobody should ever take that away from you. If you are profitable, you are such a winner. And consistently profitable is your game. That way you become a financial blessing to yourself and those you love, which is the real ultimate goal in life. The first critical thing in mastering your edge, you must know all of these things that we've just been through. Knowing the KS model, knowing how price moves, knowing if we're in psychological sunshine, almost proving the case to the board of directors of $1 billion firm, making sure that you can absolutely substantiate the position that we're in, and then looking for black swan events, looking into the markets, keeping a finger on the pulse of everything. And then, of course, you need to go from a chart that looks like this, for example, with lots and lots of indicators, massive indicators, to a chart that looks like this. And the reason we do that, this is really all you need to start. There's a lot of things that you'll need as you get more and more experience, but this is the critical stuff you need to start with. If you do this, you will be ahead of, I think, a lot of people without question. Remember, these lines, resistance and support, are incredibly important to you. Now that we know that Bitcoin is on track, it's all sunny, we've got supporting evidence, we need to now look into the crypto market. Isn't it interesting? We started with, where do I buy, where do I sell? Now, hopefully, a different perspective is reigning within you, which is, I need more context. Just think about it like this. Every dollar that you're putting in, or euro, or pound, or whatever currency you have, that measures your life force. You're giving your life force to crypto. You need to guard it. You need to protect yourself. It's really, really vital. And as you can see, there's so many different things you can go into. There's so many choices. Which one do you pick? The most important thing now is to figure out the direction and the engine of the crypto market. Twice a day with the community, we go through this. We look at the top 7. We look at the greatest gainers over 24 hours, the greatest losses over 24 hours, the greatest gainers over 7 days, the greatest losses over 7 days. There is actually a way to interpret these thumbnails that I just shared yesterday. Let me grab that video for you. Here you go. It's episode 104, how to read crypto thumbnail charts. It's got a lot of really cool stuff in there. It just gives you another edge. I'm always happy to share my edges with you. I'm at a point in my life where I would just really love to be a blessing to other people. So many people have been a blessing to me. I just like to pay that forward. Part of my personal edge is that I trade the Binance derivatives market. I'm really interested in the change of price in the contract for the past 24 hours because this gives me an understanding of what could be moving within the crypto market. This is a really hidden technique, but our community goes through it every day, like twice a day. Axie Infinity, 58.8%. We're looking for like double-digit gainers because we know when a particular coin takes up a top position or a top 5 position, either percentage gain or percentage loss, it tends to stay there for a little while. So we're trying to identify them straight out of the gate. It's a really, really interesting thing to do. I also say, don't trade futures, options, derivatives, unless you absolutely know what you're doing. That means you must have a lot of knowledge and be consistently profitable. All we're doing here is really looking for double percent gainers like Alice, CVC, Bluezell. We're trying to find Elron. We're trying to find storage, a lot of things that can be moving inside the market. This is an edge because a lot of people don't look here. When we do our twice daily briefings on Bitcoin, what we're actually doing here is seeing where price is going, how it's moving, what particular actions or activities, are there shakeouts, are there technical violations. I do my best to try and estimate where price could go. I felt that when we were selling down strongly here, we were going to make a higher low around this particular area. Even some of the community members said, wow, Ken, that's a pretty brave call. You know, people are expecting $20,000 Bitcoin now. And yeah, I make those calls because I believe that they're correct. If it was going to 20,000, I would tell people, I'd say, yeah, something's wrong here. I believe it's going. But I don't believe that. I don't have any of that fact on my side. If the facts change, I'll be the first to let you know. We can see that the price held up very, very well above this structural resistance of 32,414. Price is currently trading at 34,727. We're doing really well. We're just on that structural support now. Used to be structural resistance. Now Bitcoin is going to seek to get over 35,000. It's pretty cool. But this is not enough. Remember, all we're trying to figure out is if you should buy something or not on your favorite coin. But without this, your account will be blown. I have to say it. It's so important you understand the risks. This is an incredibly volatile market. It's not easy. If you have the theory about Porsches and retirement, yes, that can happen, but not without knowledge. And knowledge always requires you to invest your time, and it's the most worthwhile thing you could ever do. We always look at crypto total market cap as well. Now, what is this thing? You can see that there's a price, effectively, in trillions of dollars. This is the capitalization of all coins in the crypto market, moving as one. You will find that alts tend to outperform Bitcoin on the positive and the negative side. It's really important to understand what is actually occurring here. So we can see that there's a pattern. You notice this big M or McDonald's sign, and you've got maybe stairs up, and you've got something here and something here, like almost like an upside down. What is that? Like an upside down V? What do you think it is? Let me know in the comments. And then you've got this. What is that thing? It's really fun to look at these patterns and try to name them something, because when you see them, you'll be able to recognize what happened in the past too. Very cool. Now, if we pop back to Bitcoin, we can see the M, that upside down V, and the same pattern playing out. Let's look again. Total, the M, upside down V. Look at that. As I was saying, Bitcoin moves the entire market. If you want to know what is happening with your coin, your beloved alt, and you don't have to invest in Bitcoin. So many people say it's Bitcoin or bust. I'm not one of those people. I'm a trader. Whatever works for you, whatever is your edge, should be honored. The other thing to note, when you are doing technical analysis, where you draw your lines is artistry. So long as you are consistent, and please have a look at that really interesting video on how to draw these lines. It will probably be the best thing that you could possibly do. Just remember, it's artistry. Now, we see currently Bitcoin just above structural support. Now, this is pretty much called clean air. You can expect alts, if this continues, to fly, but it's not enough information yet. You're probably saying, oh, Ken, I already understand it. It can't be. You've got to collect all sorts of data. Yep, I have to keep you safe. One thing that we do each session is we look through the longs and the shorts. The shorts are here, measured in red. And what you want to do is look at the relativities. The shorts are decreasing. The longs are increasing. The longs are overcoming the shorts. The longs and the shorts exist like a yin and a yang. They're balanced. They bring balance to the market. When the longs get too overextended, the shorts come in and balance the system. And the other way around, when the shorts go too far, the longs come in and balance the shorts. There's always a balancing that's occurring. This long and short behavior is really quite fascinating. We look at it each technical episode. We also look at liquidations. Liquidations are really important. That tells us the overall health of the market and the trading volume, really. We can see the 24-hour liquidation volume, which is called RECT, is $166 million. Only 32,849 traders were liquidated. This is really low, and that 166 is really low as well. What we can see over the past hour, 99.3% of liquidations were short. So if we actually zoom in on a 15-minute time frame, we can see there's really not much trading at all happening, but the short liquidation tends to push the price up. It's really important to always remember Rule 4, price moves in waves. We looked at the stock market, we saw those indices, they're going up. Yes, they'll come down. And when they come down, the newspapers will jump up and down. The media will be saying crash, 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 because they just reflect current sentiment. That's all. You know, price moves in waves. That's really, really important for you. It's made people in the community a lot of blessings. Rule 39 is incredibly important. Buyout support. It's always about patience. Patience always. Have patience to buy at support. Have patience to sell at resistance. And have patience to understand what part of the market cycle you're in. You're exhibiting a lot of patience by setting up all your knowledge really, really well. The KS process is a patient process. Without it, you can find your account disappear, and that account may have taken your whole life to accumulate. You need to care for it. It's really important. As part of our process, we always go through the top 7 because the top 7 are a very large chunk of the market, Ethereum being quite a big chunk as well. We look at the technicals, we understand what is going on. We look at Binance Coin too, because it's so large. We see the technical aspects playing out. And then we tend to go through a bit of philosophy, if you like. Let me introduce you to Rule 152, select correctly. Now, what does this mean, you say? What does select correctly mean? Okay, you ever watched any of the Got Talent shows? And you can have incredibly talented singers get up there and pick the wrong song, and it's just done. They're out. And it's heartbreaking because they're so good. It's like this in crypto. You pick the wrong crypto, you can be in a lot of trouble. Now, what is this? Select correctly. Negative people cannot give you a positive life. Why am I saying this? You will find that people tend to be one way or another. They tend to be very positive or very negative. Of course, the middle road is what people should be. And I guess nobody should be anything. But if you think about balance, especially with investing and trading, that's critically important. Many years ago, decades ago, I knew I was right. The market was going up. I knew it had to come down. So I traded from that perspective. Man, I got hammered. Okay? Just always think we just have to go with the reality of the market, whatever that is. Negative people see a negative outcome. Positive people see a positive outcome. Negative people, no, it can't go on. It's all a bear market. It's all over. $10,000 Bitcoin. Crypto is dead. Positive people, $1 million, $100 million Bitcoin by the end of the year. We just started. You know, the truth is that we require balance. We know that there is always light and darkness, yin and yang. We need balance. Everything I give to you is balance. I am not a maximalist. I am not a person with laser eyes. I believe in Bitcoin and what it's doing for a lot of different reasons, but I'm an executive. I look at things from a finance perspective. I have a financial background, actuarial science background. I look at things from that nature. Now, bad investments remain bad. You can do this, throw that money down the toilet, but sometimes we have to cut our losses. It's important to select the right things, and understanding technical analysis, understanding what we go through each day on our channel will give you a really cool insight, and it's meant to be helpful. Everything that I do, I give it away freely because I want you to be more of a financial blessing to yourself and those you love. We also go through Cardano. There's a lot of community members love these particular coins. You can see Cardano is really acting quite strongly. It's come up in a wave, and we know waves always, price is always moving in a wave. So it waved up and waved down, wave up and wave down. It's normal. We also look at Doge, which is a top coin. We can see it's bypassed its structural resistance, now turned it into structural support, and it's got fresh air above it. It's also being supported by this line, and it's also past this resistance. Doge is looking pretty interesting right now. We also cover XRP, the top 7. A lot of community requests on XRP. We can see this structural resistance is being turned into structural support. There's a lot of fresh air above this structural line and structural support here. If these terms aren't making sense to you, please have a look at that video that I pointed out before. That video, just to save you the time of looking it up, is episode 93. It will help you out tremendously. The community knows when a particular coin comes up to structural resistance, it tends to be repelled away. It creates fresh air on that side. What we want to see is fresh air on this side and the price going up. It's really helpful to know. I give a lot of tips and tricks in each episode. From time to time, we also go through community favorites, requests outside the top 7. Cartesi is quite a favorite. You can see Cartesi is actually trading above structural resistance. It's got clean air here. In other words, it's not bumping along the structural resistance like Doge is at the moment. And that's another reason why we look through so many pairs, because we want to see how everything is reacting. You notice this cut across resistance here, this flat lining, big rally up, digestion, consolidation. Cartesi looks quite fascinating. We also look at things like Polkadot. We can see the structural resistance is up here. It's pretty high, around the $22 mark. DOT is currently at 15,390. We can see this resistance line, DOT has managed to get above that, which is fantastic. It's converted it into support. A person asked me in the community, does this always happen? When you pass resistance, does it always immediately become support? In this case, yes. The issue is that it's got to get above that. It typically goes above like a breakout, a retest and resumption, but this is perfectly legitimate too. These are all the little tips and tricks that I always share with the community every session. We also do community requests like Polygon, Matic. A lot of people in the community love Matic. We can see that the current price, you see this support here broke down and now is acting as resistance. there's also a light level of structural resistance playing in down above this price at about 116. There's a heavier line of structural resistance around the 128 mark. We can see Matic is acting problematic. Sorry, I always love to throw a bit of humor into these things when I can. The issue is that this is really important to understand what Bitcoin is doing. In this case, as Bitcoin improves, we're not too fussed about this, because as Bitcoin increases, Bitcoin's gravity will pull Matic with it. This is a critical thing to understand. If we're going down, the alts will be dragged down more than Bitcoin. Bitcoin is a center of gravity for the entire crypto market. Until that changes, that's just the way it is. Let's revisit Rule 148. Be 100% responsible. When you trade, when you invest, please take it really, really seriously. It is serious when you put money on anything. Do the research, go through the process. You'll find that it pays incredible dividends when you do it properly. It's probably really useful to understand that when you put money down, you could put money down on so many different things. Look at all the structures. Look how different they are. This is why you need skill. You need to understand exactly what is happening at each time. All of these different patterns can be incredibly confusing. See, they've got similarities, but they have differences as well. Knowing where to enter, where to exit, you need skill. It's incredibly important. You can see that's a good one, isn't it? Everything about trading and investing is the acquirement or attainment of skill, but also philosophy. Philosophy can be one of the single most important things that you get. If you think correctly, like with anything, you will do better. The more constructive your thought is towards your trading, the less freaked out you will get by any news. You will understand what is going on. You can see just how many patterns are here. Whenever I put a pattern together to share with the community, I have to go through a very rigorous process. Look at them. They're all over the place. It's really important that you try to pick well. If you're just starting off, I would recommend that you keep with the more major players, because you'll have less volatility. The little coins can be very good, but they can wreck you as well. Just always keep away from leverage. If you're asking, what should my stop loss be? You're under leverage. I would urge you to not be under leverage. Leverage creates unlimited losses to the extent of your account balance, and sometimes more depending on how price moves. It's really important that you take care of yourself financially. Okay, this is just a real look inside what we do each day. I know it's a little bit of time, but it's paving a phenomenal foundation for you to be an incredible blessing to yourself and those you love. I hope you found this content useful. Everything I do for you is free. Remember, I just focus on the technicals. I make money from the markets. I don't have any paid groups, reports, indicators. I don't involve myself in any of that stuff. I just want to help. Please be aware of scammers. They're certainly inside the channel. I'll never reach out and ask you to give me a call. I'm available anytime by direct message on Twitter, and of course in the comments as well. Please say hi and let me know where you're viewing from, and if you have any questions, especially about this. I really want to help you. The best way I can do that is to know what you need, so please feel free to share that with me. If you would like twice daily updates, 7 days a week on price movements in the crypto market, please subscribe to me on YouTube and follow me on Twitter. You can always reach out. Crypto is volatile. Always prepare yourself for the best and the worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.